Welcome to another video. My name is Robin and as per usual, I'm joined by Kirill, and today we're going to discuss with you Occidental Petroleum Corporation. And as you are probably used from us by now, we're going to go over our 4 steps of value investing. So what's in the news? What are the fundamentals? What are the important ratios? And finally, what's the valuation? And that's also going to be the value you're going to get out of this video today. As per usual, it's not financial advice, but it will be your starting point for your own due diligence. So if Occidental Petroleum is on your radar, make sure to watch this video until the end. So Kriel, let's start with the news. What's up?
Yeah. Basically, there's nothing like, breathtaking happening in the past week or something, but it's just in general, we thought it would be nice to talk about the big bet of our lovely Warren Buffett. Because like whatever so far we've been discussing in terms of, for example, him trimming down his Apple stocks and just rebalancing his portfolio a little bit to get more cash in hand. He is also doing something very interesting, which is making a big stake in the company that is called Occidental Petroleum. It's nothing like which was on the radar before, apart from, of course, Warren Buffett's radar. It's actually, he's making a big bet on it, which is already accumulated to, I think, around 28% of the stake of the company, as we can see here. And even though, let's say, the title of the Baron article says, the bet can be in red, but it still has probably quite good potential. So Mr. Buffett has acquired already 255 million of shares, which are worth around 13 billion US dollars, which is a big stake, quite a big stake, and that's why we thought it would be great to discuss what could be the potential reason why Mr. Buffett actually decided to, more or less take over the company like that, and why he actually wants to put quite a lot of money into it. So if we're gonna go to our lovely web app, as per usual, we can see that, of course, it's Occidental Petroleum. For you guys who don't know, you can also check it in the company description. The company engages in the exploration and production of oil and natural gas. Yeah, just simple. They got a few segments, which is oil and gas exploitation, exploration, acquisition. Also the chemical one, so making different chemicals from the petroleum byproducts, and the marketing. So they develop, they produce oil, and so on and so forth. So it's quite a bit of a diverse company when it gets to the energy sector. When we're talking about the oil and gas. Pretty simple, nothing too complicated to know. What we're gonna get into in the future is very interesting to check their financials, especially for a certain period of time, and we're gonna talk about it later.
Yes. All right, so we can just go over quickly because I see some of the just regular ratios that we have always next to company descriptions.
Yeah.
So we see a PE ratio of 16.95, and on its own it doesn't say a lot, but I did look it up, and on stock analysis it says that this industry, so oil and gas exploration and production, has an average PE ratio of 11.38 points, and it was 34.66 at the beginning of January 22. So also keep in mind that, for example, this industry is highly volatile. If there's anything happening in the world, because oil is, of course, a very valuable resource to have, especially in these difficult times with wars going on in the Middle East and in Russia and Ukraine, you'll see that these prices really start to fluctuate a lot. So just keep that in mind for this valuation rate.
Yeah.
But yeah, it seems to be on the higher side of the PE ratio.
Yeah. What is also important to highlight, and I think what is very interesting to also add, we once did one of our first macroeconomic videos a while ago, when we were also including the oil prices and oil consumption worldwide. And what's important to highlight, that even though, let's say, Occidental Petroleum behaves more or less similar to the also oil prices, right? Just the raw pricing per barrel. What's important to highlight that still the consumption overall globally is still keep on increasing. It might have some volatile times, for example, once there would be times when, for example, there's not so much production is required globally, right? If the economy is going down, let's say, so then less energy is required. Hence, the prices for the oil and any other energy resources is also going to go down. But if we take the grand scheme of things, energy would be needed anyway, regardless of what it is, as long as there's humanity on the planet, because we need warmth, we need electricity, we need something to cook our food on, so on and so forth. I'm not even talking about any kind of basic products and stuff like that. So regardless of what's going to be happening, this is like the industry we cannot live without, So I think that's also one of the big long bets that Warren Buffett is making. Like, there's going to be some volatility in the short term, right? And that's why maybe he's probably thinking like, okay, maybe it's a good time to, get on board of that ship, especially when the oil prices are going to going down.
Great.
Yeah.
What else do we see? So we see they pay a dividend of 1.20%. So that's decent. That's fine. They have a pretty decent gross profit margin. They have also quite nice operating profit margin. So that's really good as well. Can we go to the company foundations?
Of course, yeah.
So we see revenue growth good. Their long-term debt is covered by the free cash flow. That's also good. Net income growth, good. Free cash flow growth, good. The only thing that we see here is that they are diluting quite a bit in the past 5 years. And we can also see in a bit where they have been doing that.
Yeah, exactly, yeah. So if we go to the key financial results right away, you can see something very interesting, because we already did a little bit of the checkup before. The gross profit has tanked in 2020, as well as the pre-tax income and net earnings. You can see like quite a big drop in there, and you would be curious, okay, what could be happening there? Why is that the case? But it's actually pretty simple. It's because back in 2020, Occidental Petroleum acquired a company which is called Occidental Petroleum Corporation for 57 billion. And that's pretty much just a company which has very big oil and gas reserves in Texas and in New Mexico. So it basically was just a strategic move where the company bought, another company just to keep on increase its, acquisition of more gas and more oil. Of course, that's always good. The more revenue there is, the better. And the deal was also happening both in cash plus in the stock sales. So that's why you could see this big drop, which is more than justifiable in my point of view, because if you're actually making a strategic decision to acquire a company that will in the future keep on increasing your growth opportunities, I'm all in for that. So that's actually, I would say, even good to see. And
just a small asterisk here, because normally, of course, acquisitions are good, especially like these. They are in the same industry, they're on the same, business playing field. But sometimes businesses also buy businesses just for the sake of buying businesses, and for those acquisitions, you have to be careful. Like, it has to make sense in the overall business plan. And I think this one is a good example of it, and you can see it as well in the gross profit after those years has been almost doubling 2019, it seems.
Yeah,
maybe that's a bit too aggressive of my estimations, but still, it's a lot.
Yeah, so it already you can see that after the dip in 1 year, it already recovered back. So that's always great to see, so that it means is that either the integration was successful, or that acquired company is just going to be working as just an independent business. So they're not going to be integrated, for example, in Occidental environment. So they're just going to be doing what they've been doing, right? But it's just going to be under the management and under the holding of Occidental. I would say both of them would work, because whatever works for both of them internally, me as a shareholder, for example, potentially, I would be happy, because more money, the better it is, right? So, yeah.
All right, so let's scroll down a bit.
Yeah, maybe.
So the shares.
Yeah. Also, one more thing. Sorry to interrupt. What's also probably nice to see is that interest expenses are also going down. So that's also a very good thing to see, especially with regard to the fact that the interest rates were going up. and eventually, like, the company would, for example, might need to refinance its debt and whatnot. It's good to see that they're actually paying it down even after the acquisition. So they still have even enough cash on hand to start, paying down their debts. That's always all the good signs I see so far.
And then also here in the shares outstanding, we can also see where they started building up their shares position, right? So they have been increasing 2019, 2020, and then now in 2023 they have been decreasing slightly.
Yeah.
So that's also probably for the acquisition of the firm.
Yep.
If you said it has been done with cash and shares, it makes sense.
Yeah. And even then, after 2022, they already started doing the buybacks, like almost instantaneous. So that's again another good sign that they have enough cash. They have enough cash on hand to do the acquisition, to pay out their debts, and buy back the stock, which according to PE at least, okay, could be a little bit higher than the industry average, as you mentioned, right? But it's not, we're not talking about the PEs of 40, 50, or 60 when we're talking about, let's say, tech stocks, right? So,
Yep.
So far, green flags, on the purple graphs, let's say. What else? Yeah, so...
And let's go to the key ratios. So selling and general expense ratios are low. Makes sense, it's a B2B company. So, it doesn't really need to advertise. It's oil. Even otherwise, like, what? It's just oil. It's like,
exactly.
There's nothing fancy about it. Maybe you need to go to some fairs or expos or whatever.
Yeah.
But that's it. Can we just go down a bit? So free cash flow growth, it's a bit unstable.
Yeah, that's the only thing which is not that good to see. But if let's check, for example, the free cash flow just on its own. Where is it? Yeah, the free cash flow. Yeah, you see, like, it had quite a big spike in 2022, right? I think also partially because of the quite high oil prices, right? Oil and gas prices are pretty high at some point, so that's why the company had quite a good year back then, right? But then it kind of stabilized to more or less what it was in 2021, and then more or less double of what it was before that, before the acquisition. So if we would assume, let's say, if it was before the acquisition times, if they didn't acquire that company, it probably didn't have such a big dip, let's say, So I don't really think like that's that big of a deal, especially if you would do your further due diligence and figure out, okay, what could be the reasons behind it. So I would say it's all right.
Yep. Right. Well, let's see if there's anything else that we want to see. If you can go down a bit. Yeah, so the shares outstanding change, you can see that we discussed that, right? So 2019, 2020 makes sense.
Yeah.
Operating margins are a bit unstable. Gross profit margins are really on the high side. So good to see. Yeah, just looks pretty good.
Yeah, and also keep in mind that it's kind of also, we're talking about the company in the energy sector, so you would not see similar margins as we have in the tech stocks, right? So it's you would rarely be able to see operating margins of higher than, let's say, 50. I would say even higher than 20 on average, because again, 22 it was quite a outstanding result for the company, I would say, as well. When it gets to the performance of Occidental. So I would say it's okay. It's okay. It's nothing like fancy, nothing fascinating to see, nothing to be super hyped up about, but it's okay. It's all right.
All right. And then for the final step, the valuation. So you discussed this in the previous video, Kirill.
Yeah.
With the selecting of years, new feature that we have.
Yeah.
So we can just go over and see. And it's also good for you to use. So you have different estimates that you can plug in.
Yeah.
We just want to make things really easy and, accessible for you guys.
Yeah.
So
hopefully.
Let's start. So what do you say, Kirill? So for the max, how much did they return? 17% average growth, 4%, 24%, minus 3%. So
I would say it also highly dependent on oil and gas prices, right? Because of the fact that they also went down quite significantly. Probably in the short term, it would be hard to have any good growth, right, percentage-wise, as it was in 2022. So I would say maybe we could, for example, if we put the projection period of more than that, for example, 15 years, because I would be more than confident to say that it's not going to go out of business, to be honest, because everyone needs energy, period. The renewable initiatives were nice, all these green things as well, but it's probably going to take time to actually, make it commercially viable and make sure that every household would have some alternative source of energy, So I would say, for example, for 15 years, if we would assume that, then the growth rates could be, I would be confident to say, like, for example, somewhere in the ballpark of probably 7%. Really.
So I'm gonna tell you what the analysts think.
Yeah, please.
For the next 5 years, per year, 4%. So we can take the average of your estimate, right? So we can say 6.5% growth.
Sure. Yeah. Let's do 6. It's completely fine. Yeah.
So again, for discount rate, we normally do 10%, but this is also for you something you can change this around to your liking, play with it.
No.
The estimated growth rate for us, 6%, as we discussed.
Yeah.
So for the projected PE ratio,
I think it's in ballpark of 14, right? If I recall correctly. And right now
average,
it's also
the average of the max is 14, so I think that's fair.
We can do that. Yeah.
And the required rate of return, we keep this at 12%.
I would even put it, to be honest, from my perspective, depending on what you're looking for at the stock, right? It's definitely not like a grower, right? What probably the expectations are from Warren Buffett as well is that the company is going to have share buybacks pretty soon, quite quickly, quite drastically. That's going to happen, and I would imagine that it's going to grow dividends as well. So if we're just talking about the pure price increase, right, I would not really call it for a big increase in that part, but I would count more on these other two things. So to be honest, I would be even happy with 10.
Right.
Very happy. Yeah.
We'll do 10.
Yeah. And then click the analyze button. It's not bad, right? So the cash flow, what's good to see is Warren Buffett's formula, which is, of course, we're talking about the guy who's actually making a big investment in it. The price of 64, justifiable. Cash flow, discounted cash flow formula, same story. It's even higher, $67 per share, right? Also good to see. Target valuation is more or less the same as the current stock price. So we got the average valuation of around $44. I would probably maybe remove some of the outliers, for example, the NPV formula in this case, right? Because again, depending on the different stocks and all of that kind of stuff, some of the formulas can yield quite drastically different results, right? So just be careful. Also make sure to understand what every single formula does. And you can also check out our inspection buttons to learn more about what it is behind it. But I would say, to be honest, the current price versus our valuation is ballpark, more or less, not that far from each other. So we have a little bit shorter valuation of around $45, which is okay,
And then based on the margin of safety, we also get to like 31. So if you're really not very well known in the industry of oil, then this might be overvalued. But of course, if you really know a lot about oil, you know the industry like the back of your hand, you have been investing in it for longer of times, you can, move this margin of safety towards something you're more comfortable with, and then you will get to more or less our evaluation, as Kriel mentioned.
Yep.
So, so you could decide to pay a small premium on this company, but so far this is one of the, let's say, closest to fair value company we've had in months. So that's also a good sign.
That's true, yeah. I think it's also one of the biggest reasons for that is just the decrease in the energy prices, so in oil and in natural gas, and that's what Occidental is doing, right? So that's their main source of income, is the extraction and sale of it. So makes total sense. All
right. And with that said, thank you, Kriel, for your lovely insights. Thank you for watching and listening to us. If you want to get access to the web app, make sure to subscribe to our YouTube channel, because that's where we will announce the launch of the web app. It won't take much longer. We are almost there. Make sure to follow us on our social media platforms to stay updated when the app will launch. So thanks again, Kriel, and have a good one.
Bye.